Hello and welcome back to my YouTube channel. In this video, we're going to see the applicability in practice on investment in associates using the equity method. So we have an example that we're going to solve together where Burger Queen, which is a fictitious company, purchases a 25% interest in Burger King, another fictitious company, for $200,000 on the 1st of January 2027. So Burger King reports income and dividends. So we have the net income amount of $150,000 in December 2017 and dividend paid of $45,000. In December of 2018, the net income reported was $250,000 for the entity and dividend paid was $90,000. Then also for 2019, we have the company reporting $350,000 in net income, and they've paid out $185,000 in dividend. All right, so the question for us here is that calculate the investment in Burger King that appears on Burger Queen's balance sheet as at 31st of December of 2019. So the first thing we need to do is to determine what is the accounting entry to pass at the point of recognition or making the investment. All right. So you can see that from our first principle that the investment at initial recognition is recognized at cost. So the amount Burger Queen has invested in Burger King will be reported at cost in the books of Burger Queen. Here we're seeing that we've debited the investment by $200,000 to recognize the investment in associates and credited bank for the amount paid out. For this investment. All right. So that's the first point to do. The other point would be to then determine what is the carrying amount, like the question suggests. Calculate the investment in Burger King's that appears on Burger Queen's balance sheet as of 31st of December of 2019. So we have put together the initial cost. What is the equity income recognized in 2017? What about the dividend? The equity income in 2018, the dividend amount, 2019. So let's start with our analysis. So first we pick the initial cost. So our initial cost is $200,000, which was paid for this investment. Then because the entity has significant influence, he has bought in 25%. So the post-acquisition net income in December 2017 is $150,000. So for the income reported in December of 2017 of $150,000 equals to 25% multiplied by $150,000. Then for the dividend paid, 25% will be received. So because this amount is a distribution, it is a reduction in capital. All right, so we're going to deduct this amount from our calculation. Equals to minus 25% multiplied by the dividend paid out in 2017, which is $45,000. All right. So in 2018, net income reported was $250,000. So 25% of that amount will be recognized, 5% multiplied by $250,000. Then as usual, the dividend that was paid in 2018 would be deducted as well, equals to less 25% multiplied by the total dividend paid for in 2018. Okay, so in 2019, net income reported was $250,000, so we'll take 25% of it as well, multiplied by $350,000. Why finally the dividend paid in 2019 will be deducted, equals to minus 25% multiplied by $185,000. So when we sum up the entire amount, including the cost, we have the carrying amount of $307,500. So this is simply the initial cost plus the share of profits less the dividends that we received in the period will give us the carrying amount in our balance sheet as at the end of December 2019. All right. So let's see how the account will work year on year for each of these elements, like the share of net income and the share of dividend received. How do we account for this using debit and credit? So the first bit would be, because it has reported profits in the last 3 years, there's a direct relationship that your investment in associate will go up because you'll be recognizing profit as against losses. But if there is a loss that has been reported in the investee company, So your share of losses will reduce the investment in associates. All right. Then any dividend that you receive or that was being paid by the investee company will be received in your bank account. All right. So let's start with the first bit with the credit side because there was a profit. We need to credit the share of associate profits in your P&L. So the share of associate profit in 2017 is the $37,500. So I'll do this less $35,000, right? Then in 2017 as well, you receive a dividend amount of $11,250. So this amount will come to your bank. So I'm going to change the sign to make it positive because we're debiting bank for $11,250. Then the balancing amount that adjusts your investment in associates in your balance sheet is the net movement between your share of profit and the dividend you received. So what I'll simply do is to sum $37,500 and $11,250. So the net of that amount will increase your investment in associates in your balance sheet. All right, so that's our net amount increasing your investment in associate is $26,250. So this amount plus the amount you receive in bank gives us the total credit we receive in the P&L as share of associate profits. All right, $37,500. So these are all for December 31st, 2017. So let's look at the entries to be passed for 31st of December 2018. Similarly, there's a profit that was reported and your entity that's recognized a share of this profit of $62,500. So we're going to credit the share of associate profit in the P&L for this amount, $62,500. Then we have received a dividend of $22,500. Right, so we're going to increase our investment in associates in the balance sheet by the net movement of the $62,500 and the $22,500 respectively, because to sum the net amount of this and this. So investment will increase by $40,000 while we will receive $22,500 in our bank and recognize the share of profit of $62,500, which balances this journal entry. All right. So the last bit will be what journal to pass in 2019. Similarly, there's a profit that was recognized and your share of the profit is $87,500. So you credit share of associate profit by $87,500. Furthermore, you receive dividend in your bank of $46,250. So you recognize this amount in your bank account. And of course, the net movement between the share of profit and the dividend received in your bank will be debited to your investment associate to increase the balance. It goes to sum $87,500 and $46,250. Okay. Then you can sum up these two, which agrees to your total credit, which balances out this journal entry. So we'll come to the end of this video. Thank you for watching and see you in my next video. Bye.